welcome to XM Live and welcome to the Traders Talk. My name is Gil and I have a very, very special guest today with me, Oliver Klemm. I will make a very short introduction before he will start to talk about himself. But Oliver Klemm is probably one of the most experienced traders that I know since the 80s. He is in the markets. He decades of experience. He was in an institution on institutional level employed. He had his own companies. He probably can solve us explaining what he understands under smart money, if such a thing even exists. He can tell us today. He's a trader coach. He is coaching probably hundreds, if not, I don't know, thousands of traders worldwide. And he can tell us also maybe what are the biggest problems of traders becoming successful. Oliver Klemm, welcome here to the show.
Thank you very much for having me. Hi, Gil.
It's fantastic to have you. By the way, also for the viewers that you understand, we know each other also outside of this show. So this is really a big pleasure for me. Oliver, I directly start with the first question. Tell me a little bit about you. How did you start trading? What did you trade in the 80s? And how do you become an institutional trader, maybe, in the first question?
Yeah, sure. I feel so old when he tells me that I trade now for 42 years, but that's true. I started out at Deutsche Bank in Frankfurt, had a quick stint in the Forex department, and then traded foreign equities, which means for the Frankfurt-based bank, U.S. equities, Northern Europe, Japanese equities. This was what we traded. I had to make markets for around 150 companies, which made my mother really go wild, because at 3 o'clock in the morning, some guys called you up and they wanted the live market for Pan Am shares, for example, and you know it will be costly because they had some insider information. So this is how I started out. And then I moved away from Deutsche Bank and had I was, for example, head of trading for Banque Nationale de Paris in Germany as well, and had then my own little brokerage company, which was called OKW, and was in 1 month, I'm very proud of that, the guy with the biggest volume on the Frankfurt Stock Exchange floor.
Wow. So you said that you started Deutsche Bank and then moved, but you also traded different products. So you started in Forex and then you went to equities. How was trading in the 80s? I mean, there wasn't the internet, I suppose, and you had phone calls. Did you have live data? How long did you hold a trade at this time? Was it intraday trading or was it over a couple of days? How was trading in the 80s?
Yeah, it was, to be very honest, it was, compared to now, it was crazy. Now everybody, even the smallest retail trader has live data and everything. But then we had in the whole trading room, we had one single point of Reuters. So we had the tape running from the US market, and we had then after some years we got internet, so we could trade online, but everything else was via the phone or on the floor. So we walked from the office to the Frankfurt Stock Exchange, which obviously led to some weird things, because your clients, you met them sometimes, you even drank during market hours. I would never do that. Yeah, I'm totally clean. I don't drink, I don't smoke, I don't betray my wife. Everything is now fine. But then this was really wild. The 80s were very wild. There's this movie, Wolf of Wall Street.
Yes.
And to be very honest, if you know the movie, I tell you one thing. The only thing I did not experience live is to throw 12s. Everything else I've seen live. And I'm not proud of everything.
Wow, wow. I hear similar stories from friends I have that they were on Wall Street in the 90s, and they said really things were quite crazy at the time. So
yeah.
when you say that you were a trader at a bank, did you trade the money of clients? Did you trade the money of the company? How how does it work to work in an institution like a bank as a trader?
Yeah. It started out at the bank that obviously it was prop trading for the bank, which means I, for example, as a young guy, I was responsible for 100 million then Deutschmarks, yeah, which equates around 50 million euros right now. And yeah, you had to earn your money. It was that our boss was walking around and asked what you earned this day. And if you had anything lower than 100,000 Deutschmarks, he just, he just drew a line, which means nothing. Yeah. So the target of them was to double your money in the year, which means he says to me, I give you $100 million. I expect to get that back. And I say, thank you very much. I'll see you next year. He said, no, my friend. I want that you earn with these 100 million another 100 million. So this was the target. And every year when you reached your target, they put some 10-15% more on this. So they really milked it. It was a little bit easier, obviously, because it counted in commissions. So if you got orders from other banks, from insurance companies, you got the commission as well. This counted in favor. So you had sometimes crazy volumes. When I moved away from the banks, when I had my own bank, I traded for, the biggest names in the world. I had sometimes live on the phone Frank Quattroni, the first guy who earned $1 billion, I think it was then dollars, $1 billion in 1 year. And as wages, when he was bought by CSFB, Credit Suisse First Boston, and we traded orders. So we were like sales trading, I would say, in recent terms. So you had clients. I had, for example, Goldman Sachs, I had CSFB, I had Morgan Stanley, JP Morgan, I had Fidelity, I had Schroders, all these guys, Janus Funds and whatever, Kelpers from California. They came and they gave you an order. And these orders were sometimes huge. My biggest volume in 1 day, trading volume in 1 day was more than 2 billion euros.
Wow.
So you are responsible for the execution. You report, you give updates, you have weird orders like buy me 10% of the volume, buy me 30% of the volume. The biggest one I had in SAP, I had to buy 2/3 of the volume, which makes it crazy. If somebody starts buying with you, then you're really in trouble because the volume counts quick, the price is jumping. So it was really a lot of responsibility.
And when you trade, so let's say before you were self-employed and you had your own company, how was it as a trader? Did you get education how to trade, or you had to find out everything by yourself? Did you got the rules by your boss, like the boss told you today you're buying or today you're selling? How looks the day trader routine, let's say, in an institution like a bank?
The routine is that you get used to it, that your boss is always wrong. They want that you buy the top. They want that you sell the bottom. You go nuts, usually. The truth is that then there was, in the 80s, there was no real trader development. So what I do now with the guys I coach, it was not existent.
Mm-hmm.
It was the opposite. You were watching what others do. You were learning from seeing what happens, and you had to educate yourself because traders were wary that you take their position. So they would hide everything they know. They would even lock up the books, or they would lock up the charts they had and everything. So it was really and not a really nice atmosphere. What you had to do is to show your value, whatever you did, and to a trader to become more or less his friend, and to, then hope that he gives you some hints. What I did is I tried to learn everything. I think I have maybe read every single trading book which was written then, and I was visiting seminars with my money. I was not getting help from the bank. I went to London, I went to Miami, Orlando trade station conference and everything. And the known people I had coachings with, Linda Bradford Rushke, Tom DeMark, Jack Bernstein, or whatever, Steve Nissen, whatever. So Larry Williams, Larry Williams was very funny. We were in London. He was doing a workshop there, and he said, "Oh, my phone," because he came from the US, obviously, "my phone is not working." There were like 100 people in the room, and I was the only one who had a working. I'm as a German. I had the only one phone which was capable to call his broker in the US from London, because it was very early. Not everybody had a smartphone. So, and there were not even really smart, these phones. So I gave him my phone, and he put then the order. So I know why he calls his websites ireallytrade.com, because he put in the treasury, he put bids and offers in 300 contracts at a time. So you know that he does some decent size. And so the next time when he saw me in Germany, he obviously recognized me.
I understand.
But it was really a crazy time. And I asked him, "Why do you show everything to the people?" He said, "Here are 100 people in the room. I know in 1 week time, maximum 3 will try to copy what I taught them. The rest is moving on with their usual stuff." It's many times the way you see something, a webinar, a workshop, and you don't change anything in your life. You say, "Oh, interesting," and you go back to your routines. And this is one of the mistakes I think especially traders do.
Interesting. By the way, for the viewers who don't know Larry Williams, of course, the viewers know me at XM Live because I'm here almost daily, and they know that I am trading based on the COT report. And Larry Williams is actually the guru of the COT report. He wrote the first book about the COT report. Based on the COT report, he became a multiple times world champion in trading. I think in the 80s or early 90s, if I'm not mistaken. And and his books are legendary. So he is really a legend among the traders. And I never had I watched him many times on online events, but never met him in person. So, but definitely part of my success is because of his books.
Yeah, he's really class. He won it, especially mentionable in 1987, the year where we had the crash on Wall Street. And the interesting thing about this is that we exactly at this time, he made one spot 1 million out of 10,000 euros, and he was up to 2,300,000. So he even lost a big part, and he's still the record holder.
Unbelievable. Oliver, I want just to follow up a question about these times in the 80s and 90s and your experience with institutions. When you say that you didn't got formal education, so what would you say percentage-wise, how many traders at those institutions were profitable? I assume very many people were kicked out because they didn't survive. What was the percentage of successful trading, and was institutional trading, or let's say even is institutional trading today, smart money?
Yeah, that is a perfect question, because I doubt that it's smart money, because I've seen it. The very truth is that then most people, they did not lose their job because they had connections. They were friendly. They knew the boss. They knew the boss of the boss. They knew that the boss betrayed the wife and whatever. So they were safe. They were making money because they were doing commission. They were doing money, producing money by, I have to say, by betraying the client, by churning the client, by wrong advising the client, and they had insider information. I had in my career people, members of the board, coming up to me and telling me to buy a specific stock and to tell them when I reached a specific amount. And they said, okay, thank you very much. And 2 hours later, you had it on the screen that they were taken over to a crazy price. So it was sometimes blatant insider trading and would lead today to get imprisoned. But then it was all crazy. Yeah, these people, they were really, and they were talking their own book, obviously. And I had experienced that really well-known fund managers, they had no knowledge about the market, not at all. They just had fundamental research and they were doing then their investments accordingly, but they had no idea. I had a guy who came to me, he said, could you invest X amount of euros into Fresenius? And I said, sorry, this is more than the market cap of the company. They had no idea. They had really no idea. They liked the company, but they had no idea. So it was then a matter of having connections to the company. For example, Deutsche Bank, in the beginning, because I started there, they had very good connections to German companies. So if the CEO of the company calls you and tells you, I will be out next week with a 30% increase in profit or whatever, or I have a new product, obviously they made money out of this. But like we do now, technical trading, it did not really exist. We had charts every week from Hoppenstedt. This is a German company. And you had it every day in your mail, like on every Monday you had it in the mail. So every week, one time, you had charts. And I was doing charts on millimeter paper, on this small, and I was doing point and figure and everything. It was crazy. Now you have everything. You have 3, 4 different chart programs. You have your broker doing services for you, providing you with what you need and everything. You have access to the markets. Then you could not be sure that your bank has access, for example, to trade US equities. It was impossible. Or when you wanted to trade in Forex, they said, no, we cannot trade Forex with you because your account is not big enough or whatever. Yeah.
Wow.
Times changed rapidly through the internet. Yeah.
So before I really want to move forward 40 years and to come to today's market and what you're doing today, maybe the final questions, because just you mentioned point and figures, which I find a very interesting way of looking at the charts. Do you still use that? Or you say also, this is back from the 80s and I don't use it anymore?
To be honest, I know people who do it successfully until today. But obviously, in the meantime, there are better products, better chart forms. And I say always, the better is the enemy of the good. So obviously, point and figure is cool, especially if you have a little bit relaxed style of trading. But my trading frequency means my trades are between 7 and 15 minutes long. So with point and figure charts, it would be a little bit difficult, or I would like all the time doing crosses and circles. So at the end, I don't do it. I look at volume-based charts. I look at profiling, volume profile, market profile. I look on market structure, everything. So that gives me really real-time information. For example, I don't use any indicator.
Okay.
Because indicator have always a time lag. I'm interested in real-time price information.
I'm here totally on the same page. But really, let's now move to today's market. What did change? I mean, we are much more regulated. Everybody has internet, of course. How did the market change? I mean, again, then it wasn't probably very effective. Today we have much more effective markets. How did it change? And what do you need today to be successful, in your opinion?
Yeah, I think the structure of the market will never change because, for example, in an uptrend, you have higher lows and higher highs, and a downtrend, the opposite. So that can't change. The market cannot produce higher highs and lower lows at the same time. It's impossible. So the foundation stays the same, but the velocity is totally different.
Mm-hmm.
When we had then trends, these trends were by far not as fast as it is now. And on the other hand, because we needed more time for the trend, we had not these like eternal ranges. Now, market is very much more efficient. Information travels at the speed of light, and we are sitting there, and if there's an information, if there is a new valuation of something, it jumps. The market break out of a range, and they really go like a rocket.
Mm-hmm.
But on the other hand, you have these eternal ranges now, because if everything is known by the market, everything is valued, then it's really just technical, the popping and bouncing within the range. So you have to be very careful to not get sleepy looking at the market, because then you might miss the move. So now you employ a lot of technology. If you do equities, or you have a focus on, I don't know how many Forex markets, you usually put alerts on it, and you get alerted if something happens. And everybody has now a news system. Yeah, you have a squawk box, you have your broker who provides you with news. You have, let's say, X, which was formerly Twitter, or other things where you can watch it real time. You have maybe your Bloomberg television or whatever feed. That was then very expensive. I know that I had like 10,000 euros cost for information. You don't do that anymore. It's all more or less for free, real time.
Mm-hmm. Absolutely true. So, trading, did it become more difficult, or is it more easier today?
You're asking somebody like, if I drive car for 42 years, I will tell you that driving a car is very easy. If I drive a race car, I tell you, oh, a race car driving is very easy. If you do it the first time, you say it's impossible. It's a scam. You cannot drive the car at this velocity. It's not possible. The same thing is true for trading. If you think it's easy, if I sit here and I tell you it's easy, you will feel betrayed, because you have to go through a fight. The opponent is yourself.
Mm-hmm.
Because on one hand it's easy, but it is not easy to go against your ego. The market, it cannot go that high. It should come down and everything. All these belief systems you have, they're going against it. If you accept that you don't have a crystal ball which tells you, oh, market will be tomorrow X, Y, Z, and you follow the market, then it becomes easy. But it's very difficult. I needed years to come to that insight, and more years to do it. And sometimes even now, after so many years, I have a day where then after I look at my trades and I say, who did that? Who had the idea it would go down or it would go up today? And you're really surprised how stupid you can be one day or the other. So it's focus, it's discipline, it's work. Yeah, this is what you have to accept. If you think it's a get-rich-quick scheme, you're wrong. You're you're totally misguided and you will lose your money. Because we know in this industry, we know this 90-90-90 rule that most people, 90%, lose 90% of their money in 90 days, and they do it every 90 days. There was from the French supervision authority, they made a request. They asked all brokers to give their account data, and they scanned it, and they found out that in a 4-year period, looking at every single quarter, this has happened. So there are people, they do that 4, 5, 6, 7 years, and they lose every single quarter. So how much pain threshold do these people have? Yeah, is it really a hobby, and hobby costs money? Or do they want to start learning it? Do they want to listen, for example, to Gil? Do they want to follow what XM is providing them? Are they ready to listen to somebody, or do they say, "Oh, it's nice, funny guy, this Gil," and you then trade what you think and not what you really see? Because to be honest, you see whether the market is going up or down, and then you form your ideas. You should not form the ideas. You should follow the market. This is my personal opinion.
It's interesting. We are here at XM Life. We are here, I think, 12 experts, sometimes more.
Yeah.
I think there is not one single one who is not saying at least once every hour, you have to put a stop loss, at least a mental stop loss. You have to know that you're wrong and then go disciplined out. But I think the majority is still not putting a stop loss, at least not 100% of the time, maybe 50% of the time.
Crazy.
And 50 not. It's unbelievable, It's even this most single rule, to know that you have to exit if you're wrong, people are not following it. It's unbelievable.
There are people who say, how do I know that I'm wrong? It's very easy. The number is red. You are losing money. Then you're wrong, obviously. Because if you were right, it would be green and it would be up. So you have to understand what you are doing there, and you can learn it. It's really it's like learning to put a nail into the wall. It's not very difficult, but obviously sometimes you hit your thumb, or the nail is not straight or something. Obviously, that is happening in trading as well. But if you accept that you don't use it to have a nice dopamine shock or something, if you say, oh, it's a work for me, if you accept that it's a profession, if you accept that you can really produce money day by day. I have people in my program, it's only in the German language right now, so not interesting, no marketing here from me, but they have, for more than 2 years, they have not one single day of losing money. They're better than me. So you can really learn it. These are people, they never heard of trading before, and that is even better than the ones who come to you. They say, oh, I do it 10 years, but I lose every year. It's very hard to change these things you always do, your habits, To change your habits, it's crazily difficult.
True. Oliver, you explained us where you came from, what you learned, how markets were, how they changed. Today, I know that you are a coach. You are educating hundreds, maybe probably thousands of people. Many became successful. How does somebody, or how should somebody start if he is a new trader? What should he learn? What should be his approach? There is a famous saying that comes in my mind that many people use: you need 10,000 hours to become successful. Do you agree with that?
Absolutely. I calculated how many hours I'm doing it, so I'm overqualified right now because I'm so old. But the truth is that it's a path you choose. It's not like you go on a weekend seminar and then you are a trader. No, it's a path. You have to create habits, successful habits, to make you a successful trader. So, for example, first is you have to understand what the market is. The market is like an auction which is never stopping, and people buying and selling. So the only thing what is determining the price is how many bids and how many offers and at what price. What is the urgency of the buyer? What is the urgency of the seller? You see, really, is it more demand, or is there maybe too much of whatever you trade? So I think if you understand that we're only dependent on people buying and people selling, there's no fundamental rule anymore. Really, we are totally away from anything what is fundamental, because prices can be very much under or overvalued. You cannot tell me what is the fair price, for example, for Bitcoin. There is no fair price. If people buy it up, it could go to the moon, like everybody says, or if nobody is interested anymore because now is something better to store your value or whatever, it will go maybe to zero. So there is no fundamental value. There is no idea where the DAX should be, where the FTSE should be, where the Dow Jones should be. It's just, do we have more buyers, more committed buyers, or do we have more sellers, committed sellers? Because at the end, there's never more buyers or more sellers, because you can buy or sell any contract only one time. So it's always the same number of buyers and sellers, because markets level out. So at the end, this is a myth that you have overwhelming buyers or overwhelming sellers. It is just the same number. So you have to learn to follow the market to see, is it doing higher highs, higher lows, or is it doing the other way around? Is it doing lower lows and lower highs? And then you know the structure of the market. If the structure is negative, so it has lower lows and lower highs, then you try to sell resistance areas. If you have a positive structure, at the moment we're trading in the most stock markets at the all-time high, so obviously most of them have a positive structure. So you buy on the low end, you try to defend support, and you are taking profits into resist. You're not trying to short. Most people have the misconception. They say, oh, we're trading at an all-time high, so I'm bearish, I want to sell. Why would you? Because at the end, we're creating, after COVID anyway, we're creating so much money. What is this money? What is it doing? Obviously, it looks for a haven to earn something, some yield, some performance. So they buy everything. Mm-hmm. You had this in the internet. They buy funny tokens. They buy I even forgot. Yeah, NFTs. I even forgot the name. And they buy pictures, paintings, whatever for crazy prices. So why not buy equities? Because usually the company earns you something. Yeah. People say, for example, I remember it was like $300. They said Nvidia is totally overvalued. It cannot hold that. Oh, it will come down. La la la. I said no. This is one of the rocket chips. We will see when this rocket chip dies, but at the moment, it's a clear buy. You can say now, oh, but they're 140. Why are you speaking 300? Yeah, 1 second. They had a 10-for-1 split.
They went to 2,000.
Now at 1,400. Yeah. So anyway, you have to understand that especially in the stock market, it is better because the economy produces something, performance, yield, anything. Yeah, nobody has a company to lose money. So at the end, indices will have a tendency to go up. Most people always short. They are always short.
Yes.
Because they think, oh, it cannot be, it's not justified. Who tells you? If the price is blinking on your screen, this is, for this second, the fair price, because everybody who does not like the price can act and buy or sell.
Mm-hmm.
And if you do that, if you have learned this, then you read maybe 1 or 2 books, John Murphy or whatever, so you have the structure, the ideas, how it could work, and then you start to do your own research. You look, is that true what this weird guy from Germany told me? I have to, in a positive structure that supports have the tendency to hold. You make your statistics, you see, oh, in 2/3 of the time that is true. And then you have to understand one thing which is so difficult. People want to be 100% right. There is no technique in the world. There's no holy grail which makes 100% performance. It's not possible. You have to accept that it's a relative world and you're doing maybe 70% of successful trades, which means of every 10, 3 go wrong.
Mm-hmm.
But that's all right, because if your average winner is bigger than your average loser, you make a ton of money.
Absolutely true. We have here a viewer. He's asking an interesting question, and I think this is representing the feeling of many beginners. So why is it that most of the time when I open a trade, the trade goes into my stop loss and then immediately goes again in my direction?
I think I would explain that with greed and fear. Mm-hmm. If you buy something because it goes up, then you're most often buying at a resistance point. You always buy maybe a little bit too expensive. And then when you take your stop, it might be the fear of losing. If you have a plan, you see that there is a support and you buy the support and you know in advance where you will sell in a positive case and where you will sell in a negative case, then you will be on a time horizon, you will be successful. You will not always win, but you will have a fantastic performance. Most people look at the moment, I trade mostly the DAX because I'm German. So the DAX has a daily, between low and high, a daily trading span of 200 points.
Mm-hmm.
And I was some many years ago, I was sitting there and I was explaining to people that if they did only with one contract, with one future contract, 1 point in the DAX would be 25 euros. So with 20 points in the DAX, you would make 500 euro every day. And people were saying, oh, 20 points is easy. And I said, do it. Every day, 500 euros on the DAX, do that and show me after a month. To be honest, very few people could do that. So now we have 200 points a day from the low to the high. And still most people cannot, because they're getting greedy or they're trying to play their ego. It cannot go higher. It cannot go lower. They cannot make these 20 points. And one of my former clients, he opened a group and he said, Ollie, do you want to be in my group? I said, what are you doing there? I call it FDAX 100. I say, what is the 100 standing for? He says, I want to do 100 points every day. And I said, it's impossible. It's impossible. The people cannot do 20 points and you want to do 100. The truth is that 100 points stands for I want to earn 2,500 euros every day. And he is doing that with maximum 3 contracts. He is using 1 minute and 3 minute charts and he is trading like a wizard. He is better than me, but to be very honest, if you see that one day that people are really working it. They're not guessing, is the market going up? Is the market maybe coming down or whatever? They're not looking at indicators. They're looking at price. They trade the price. They buy supports. They sell the resists and everything. They have a tight stop, an intelligent stop. I base my stop on the ATR, the average true range. Then you come to something. Then it's really like going to work every single day, and you know in your job that you will be successful. Do you think somebody who builds, for example, a house is afraid that the house will come down after 2 weeks? Do you think if somebody is a doctor, he says, okay, I don't know, I will operate 5 people, but maybe 3 die? That is not happening. So people know what they're doing. So you will know what you're doing. And if you know what you're doing, for some people it gets boring. And I say, yes, if it's boring for you to trade, if you sit there and you're not excited at all, you put your limits in, you take your wins, you take your losers, you do everything, then you are successful. If this dopamine rush is gone, for example, I can sit with my wife hours outside the office, and my phone is not one time used by me, because I'm not interested when I'm not at the trading desk where the markets are. I'm not interested because I cannot profit from that. Or do you think I sit there and I say, oh, could you please sell for me? No. So if I'm working, I'm focused. But if I'm not working, I'm focused on my wife, I'm focused on my kids, I'm focused on my animals. I'm not interested in the markets because it's like, do you think really that somebody who is an electrician, he's interested whether the neighbor has maybe an interesting line, power cord or whatever in his house? He's not interested because he's not working it. He cannot earn money from that. He's not interested. So I'm not watching it. I don't even have an app here on my phone.
You don't have?
No.
Wow.
I have nothing. I can, obviously, I have the number of my brokers. Yeah, I have different brokers, obviously, for safety concerns. So I could call, obviously, and cancel an order or whatever when my internet structure goes down. But otherwise, if I'm not sitting at my computer, I'm not interested. I'm really not interested.
Yeah, I understand. I would maybe also add here to what Ali is saying. I tell you, sometimes to me it happens also that I open a trade, it goes in my stop loss, and then it turns against in my direction. It happens. Yesterday it happened to me. I bought gasoline went down. This morning I woke up, it was up again where I was, but it hit my stop loss and it was without me. It happens. It's very painful. It belongs to this 3 of 7 trades, and we take it normally personally when something like, I take it personally still. I take it personally when it happens. It annoys unbelievable because you should actually be in profit, and it's an ego thing, but one has to overcome it and just to continue with the plan. Eventually the stop loss is there to protect you. Sometimes it does not, but that's part of the game. Again, there is no 100%, as Oliver said.
True. Yeah, that's true. I think if you accept sometimes being wrong, then your life gets calmer, it gets easier, and you will be more successful. Most people really they think it's easy and they can outwit. I would even say outwit the devil. You can't. You have to go through these motions. You have to work. You have to work on yourself, because you have to become the person who can be successful. You cannot cheat. You cannot say, oh, I push a button and I'm rich. Most people wait for this golden shot. Yeah, this one trade which makes them rich. Yeah, but it does not happen. How many people say, oh, if I had bought Bitcoin in 2008 when they came out, then I would be. I say, yes, the Mr. Would-be is the richest man at the stock exchange, because if I would have bought, then I would be rich, or the other way around. It does not make sense, because to be honest, if you had bought Bitcoin at some cents, believe me, you would have sold it at €1 because you would have said, well, the trade of my life. Yeah.
Absolutely true.
So
Absolutely true.
most of these stories, one should not go even into it. You should learn to see it as a business. It's a business. It's a boring business. You do every day, you do the same. You can say, oh, it's exciting because markets always have different price levels and they move and they do and there's news, but it's all noise. It's all noise, you know. Who cares about the news? Because you don't even know whether the market goes up or down, because it only depends on the people reacting to the news.
Mm-hmm.
The news can be very positive and the market is going down because everybody was expecting it to be so positive. So I think most of the new traders are depending a lot on the news. They try to get tips from anybody, or which is the hot stock of the day, or which commodity should I buy and sell. Excuse me. But they don't understand the basics. If you take the time to learn the basics and then you do your own research, you see, you have to feel good doing it. Everybody has a different risk tolerance. So even my best example is the following. Let's say I had a crystal ball and I would be able to tell you the 31st of December of 2025, the DAX will be at 50,000 points. What would you do? Most people say, oh, I look in my account, I buy everything what I can because it's a nice performance, and I leverage it up. I try to find somebody who gives me 500 times leverage, and then let's go. I'm sorry, I forgot to tell you that the DAX will be in July 2025, it will be only 10,000, so we're half on the way.
Mm-hmm.
You would be stopped out. You would hate me. You would try to find me to kill me because you would be bankrupt. So the truth is, don't give sense to anything, only to neutral advice. If people tell you, have a look here, I'm sure Gil is doing that all the time because I know him like this. He tells you, have a look here, have a look there, learn this technique, look how I do it. I try this, I try that. Some trades are perfect, some trades are less perfect. But at the end, you see, he's a guy who's earning a decent life. He is happy. Yeah. So look at that. This is the kind of people you should follow. This is the kind of people you should ask for advice, and you should try to follow their path. You should not try to get the latest YouTuber who says, I make 1 million in 14 days out of 10 cents. That's bullshit. Excuse my language.
I want to go back to the coaching. We have only 5 minutes left. Time is running really fast. You're coaching hundreds of people. In your experience, why, I assume, I don't know, but I assume not everybody will become successful. And also, how long does it on average take for somebody to become successful? What should they expect? Should they expect in 1 month be successful, or 1 year, or what's the time period in your experience?
The truth is, it's like learning a profession.
Mm-hmm.
So if you think 10,000 hours, it takes a long time. If you learn a profession, you need at least 3 years. A good doctor might need 10 years to learn it. So my best people have a positive performance, which means they earn every month money after like 3-4 months. But to be honest, most of them, they need a year at least a year at least. And my best people, they tell now the stories that they needed 3 or 5 years to really become consistently profitable, because you get a throwback now and then, and you get a streak of stupid trades, and you might become obsessed, get your money quickly back, and this backfires. So I think if you focus on the process, you don't focus on the outcome. You focus on the process. You try to get, like Kaizen, the Japanese say Kaizen, there's always trying to do things a touch better. If you could do every day everything 1% better, your abilities in a year would be 37 times your knowledge at the start of the year. So if you try to tweak your performance every month, that's a good process. Yeah. If you give yourself the task of reading a book every month, of learning something, of creating a new positive habit every month, you're on the right track.
I absolutely agree. This is very good advice. Why do some people not be successful? Because they don't follow advice, or do they miss something?
I think most of it is ego-based. Yeah, most people are just not winners, you know. It's in everything of life. For example, I know you for many years, not close, but you know, in the internet, you see the same guys popping up all the time, and you listen to them. I don't know how many times I listened into your webinars, despite being successful. So I have always the urge to learn, the urge to be informed. I'm curious. I'm basically curious, and if you don't have that, then your performance goes down, because markets develop, they get more competitive, they are changing a touch here and there, and you lose your edge. You need an edge. Without an edge, you're lost.
Yeah, absolutely true. Absolutely true. Wow, Oliver, I think you opened, and I see this on the comments also from the viewers, you opened many people's eyes. it you inspired me also. And again, like you are continue to be curious, also me, I try to learn every single day. This is, I have like everyday to-do list, which I have to click down, and there is half an hour learning in every day. Half an hour learning, I have to click it on, so I learn half an hour, and I think this is a good habit.
Yeah, wonderful. Yeah, excellent.
Yeah. So Oliver, thank you so much for your time. So much appreciated. And I hope in the future we can do something similar, because this was really inspiring.
Yeah, sure. Whenever you want, I'm here. I'm here to serve.
Thank you so much. So much appreciated. And see you soon.
Thank you very much.